Hey guys, sorry for taking a break. I had girlfriend aggro, so I had to take a break from making videos on YouTube. However, I still took notes, so I am going to be reading out my notes for Thursday, Friday, and today, Saturday, believe it or not. So, Thursday, February 5th, SPY appeared to be hitting bottom. And I will show you. So this is what I'm talking about. I was expecting it to hit anywhere from 671 to 677. I was looking for 680 as an exit. However, I didn't close it at 680. I closed it slightly above 680. I want to say it was 683 roughly. So I heard, and I also, funny enough, and I don't remember where I heard it, I heard that Trump is trying to lower or get rid of the requirements for PDT, which is the pattern day trader limit. It's currently at 25,000. If you don't know what the PDT is, it's basically a limit on the number of day trades you can do in a rolling 5-day period. So if you have less than 25,000 in your account, you can only do 3 day trades per 5-day rolling 5-day trading window, right? So I've already hit mine. I won't be able to do another day trade until next Thursday or Friday, whenever it is that those clear off. And another thing that I learned too about day trading is options that are opened and closed on the same day also count as day trades. Moving on to Friday, I bought a deep in the money contract. I'll show you that here. So this is that contract. It's up $6 right now. I don't know if I did this right. And I don't know why I thought, maybe getting into it will help me to see the benefit of it, right? But SPY went up. It went up in price by $10. Well, this only went up in price by $6. So I effectively have less than 1 share of exposure. Now, mind it only went up. I wish it showed you what SPY was trading at when you bought it, but I bought it somewhere in here is where I bought it. 688. So it went up $5. So I'm risking 1,800 right there, 1,800 for 1 share, not even, well, no, yeah, a little more than 1 share of value, but I'm paying 3 times the price for it. So I don't see the value in this, and I've watched videos that have said it gives you 100 shares of exposure times the delta. So if you have a delta of 0.3, it's 100 times 0.3 or 30 shares. And when selling options, I've noticed that to be the case. I make a lot of money selling options, but I tend to sell them in the 10 to 20 range because I don't have the collateral and I'm playing it safer. I could receive more premium and more exposure if I played closer to 30 to 20. And I might end up going that route, but I'll have to do that on incredibly high probability trades at a relatively far expiration so that I have time to manage it. But buying options just sounds terrible to me. And this one here I bought this kind of early in the day. Like, look at this. Who wants to see that on their P&L? I sure don't. Look at that. Like, when I bought this shortly after market open, this thing, and it's not even, it was bouncing so much. These are only what was captured when the tick ended. So when it actually records the data, it was doing like 800 in the loss up to like 1200 profit. And it was swinging like that for the first, I don't know, hour or two, or I guess, yeah, 2 hours of market open. It was swinging like that. To me, that makes 0 sense. That makes not a bit of sense. I don't like that. I don't want that on my P&L. I don't want that on my chart. I want to close that position. So I have an order. If it gets filled Monday during market open, great. If not, then I might take a loss on it. My plan is to close that position. Now, with buying options, I think I might have had a different result had I had either 100 shares or 100 shares worth in collateral that I could put up on the buy option, because Robinhood will allow you to do just buy options, but it's the same way as with selling options. You have to have either the 100 shares or the collateral, and it holds that through the duration of your contract until you close that contract. So maybe if I could do that, it might be worth it. But at that point, I might as well just let the shares do what the shares are going to do, right? Unless the goal is to make a little extra money on top, in which case, I mean, maybe it's worth it. I don't know. I'd have to look at that, and that won't be for at least another year or two. I'm trying to stick with ETFs because ETFs tend to be more stable and have fewer price swings than regular stocks, because they move with the market, and the market really doesn't move much whenever you look at the grand scheme of things. It also makes indicators a lot more reliable, because you're not exposing yourself to one bad media report. Like, the only media that's going to really have a massive effect on, say, SPY is like your FOMC meetings, unemployment, tariff announcements, rate cuts, rate hikes, that type of stuff. You're less susceptible even to the news and media. And the price alone is a massive barrier to entry. People aren't going to be gambling, by and large, people aren't going to be gambling with that much money. And making a trade based on news, in my experience, is pretty close to flipping a coin. Saturday, today, February 7th, I don't like crypto. I want to start with that. I don't like crypto, but I do think it has potential as an investment tool. I was hoping to get into it at about 64,000, but I didn't set a limit order, so I missed my window. I went ahead and bought it anyways. The problem with crypto is that nothing really gives it value. The only thing that gives crypto, any crypto, value is speculation. But people speculate hard for cryptos. I bought it a bit higher than I wanted, but with the price at current levels, I'm thinking it's worth giving it a shot. It's kind of down. I don't think it's going to continue up. I think that the whole BitThumb disaster, I think that was a one-off. I don't think that's going to be a recurring thing. And the only thing driving crypto down right now is fear and high energy costs. There's been several crypto plants, mining sites that have shut down. And I think the reason they've shut down is just high energy costs. I bought some Ethereum too while I was at it. People that usually mine crypto mine Ethereum as well. I'm just going to see how those play out. If they do right by me, then I'll increase it. Probably dollar cost averaging if it goes down. If it goes up, then I might just hold it and try to buy some dips on the way up. But outside of that, I'm thinking crypto is going to be kind of a longer term investment. And from what I've seen so far, we've only really had one crash, the COVID crash, and crypto did phenomenal during COVID. So, and I don't know, it might just be because of the stimulus checks that happened during COVID, but there's a possibility that COVID is going to do good again come next crash. That's going to be a different video though. I don't really want to talk about a crash right now. I think it's bad luck, to say the least. My max gain is $121 in a single trade, and my max loss, let's go to my max, $50, which was highway robbery. I'm still upset about that. But anyways, guys, thank you for watching. Give me a like and subscribe. Follow along on my journey to my first million.